Good morning and welcome to the Early Bird, and here we're looking at the XJO, the ASX 200 on a daily chart. And I just wanted to point out that obviously we can see support through here, and as this on the 4,000 here medium level, and as this market was moving down through here, we understood that we would get a bounce off this level here, and we're going through that bounce now. And yes, sure, I know it's pretty tempting to look at long positions at the moment, and yes, we can do that, but I do want to point out that that we could get trapped within here if this market moved up through here above these above the 4,200 here. Then we can look at at the bullish picture a little closer. But the 4-2, as you can see here within this minor group 1, this 100, 200 and 300, so the 2 would be the balance point through here. So as that was resistance there, if this became support over here, then that means moving up through it and actually coming back and testing it. Then we can certainly look to the long side there and cut out all short positions. However, we're not at that point yet, and that would be the same for the Dow Jones at 11,500. So we'd need a solid support on this 2 here. Sure, we can start to move in on Monday on a few positions. Some of them are looking quite good in terms of patterns, and we'll put those out. But just be aware that that this market can come up through here above the 4-2 and fail to find support on there, and then move down back down through there, because we're still expecting these August lows to be taken out, and that's certainly the case that we're sort of looking at. So we're just going through the bounce here, and I know that emotions change from bearish to bullish, but we just don't want to get trapped in here. We know that the 4150 is important. We know the 4172, the subgroup 2 areas in here, and we'll be looking at that in a moment. But just looking at this bigger picture here and that 4,200 through there. So just be aware of these levels, because they will help you with better timing and create a better chance of not being trapped in the market. Yeah, so we want this to basically move up through here and then come back and find support on it. And look, it may not even get back up there. There's a very good chance that the top is already in play in the US market. So we'll be looking at that. So now, this is the daily chart for the DAX, because there's a lot of information coming out of a lot of sneezing going on in Europe. We can see here over the last 2 days here, the main point, this is the same with the Dow Jones as well. Over the last 2 days here, the trading range has been diminishing, and it's also been diminishing on volume as well. So it's getting sort of less and less. So a trend has got a beginning, a middle and an end, and this is certainly ending pattern here up on lower volume, and that's the same with the Dow Jones as well. So when we look at the Dow here on slightly bigger picture here, we've got this daily bar here on less volume than that day, and then this smaller range here on less than this one here. So we'll see that struggling at the 11,500 here, and we just need to allow that to play out. That's the bottom line. It's just pointless to go long here unless there's a really solid support built on that 11,500. A little bit like it was built on here. The market comes up and then basically works itself onto a level of support. It can fail from here, and this is what we're assuming. So we need that to play out, and for a safe long position as well, we would also need that to play out there. Now, the on the US markets there, if we just sort of bring that back for a second there, there's a couple of things I want to talk about. First of all, for our region is the Shanghai market here, and you can see that that's still, edging to the downside. So we've got this market pulling to the downside, and we've got the Dow pushing to the upside there. The medium level through here is the 2,500 here, 2,500, and you can see that as we mentioned before, it's come through here. We knew it would come back and retest it and muck around, fail to find support, and now it's sort of locking under there further now, isn't there? So there's a very high probability that these lows here will be taken out, and that's what this is obviously a leading indicator in this terms, because the Dow is still hasn't taken out its lows here. It's still sort of doing its last little leg up through here. But that's important. This Shanghai market's important to us here. And this would also be a reflection of the copper market when we have a look at the copper market in a minute as well. The other thing that I wanted to point out here too, apart from the Dow Jones, was the Dow Comp. Now the Dow Comp is made up of 60 companies rather than the Dow on 30 companies. And the point being here is that it just gives us a better sort of overall picture of the situation. And we can see that it's already tested that 4,000 there on the Friday. So I'd figure that would sort of stay in play there. So it's just something to look at. If that 4,000 became support there, then, you know, we'll be looking at the long side on that closer. We'll see how we go from that. If it did push up into because there's one pattern out there that I've mentioned before, and that's in the Dow Transports. And if I just squash that up a little bit here, that's the Dow Transport here. This has actually got a different pattern than the other markets in terms of we've got this high here. Okay, so on the Dow Jones and the other markets, this one over here is the high. But in this case, this one here is the high, and it does really give a nice, clear 5-wave structure to the downside through here. Yeah, so if that's the case on this one, he would be looking for an A and a B and a C wave moving up here. So we'd see that move up 61.8% and then roll over from that point. So this is just a little bit of a different wave pattern through here, and we'd need to look at that carefully. Now, if that was going to travel further up through there and the Dow was going to go above the 11.5 in a reasonably strong way, we would be looking at the September the 27th, which is about 7 trading days away, for that top to play out through here. So that would bring us around to next Tuesday. It's a new moon there, and that's just a bit of a Gans number there on 7/7 to 49. It'll give us 49 calendar days through here, and give us the based on 7 time, and the 27th of September would come into there, a bit like July being the 7th month as well, a bit like the 2007 as well. All the sevens dictate time, so that's something that we can sort of look at there and just sort of be aware of. But just coming back onto the Dow here, just being aware that the medium level through here needs to play out through here. Now, we've either got a triangle pattern coming through here, or we've got a flat correction coming through there. But we just need to allow this to play out here. We can see that we've got shorter trading ranges through here, and they will be on lower volume as well. So we just need to play that out. That could certainly be the top in play just there. So that's how sort of critical the situation is. So be patient, and timing is extremely important. And don't feel that you're missing out on anything, because if that did push up through there further, it's definitely going to come back and retest it, and then that's where we'd be looking at getting into to longs more so on our market. But we would want to see, because of the Shanghai market moving down lower, then we would want to see a strong support sitting on 4,200 for our local market at that stage there. So, okay, that's the indices on that sort of level there. All the other markets sort of follow into that. This is the SPY here, and we're basically looking for, we knew that would be having trouble at 41.50, which is the 61.8 retracement level. That's sort of panning out now, and the market's getting over that. So we'll be looking at the 72 number here, the 65, 72, and the 80. But the 4.2 that I mentioned here, and we're looking for an A, B, and C to the upside there, and then from the 4,000 that would be bring all that in there, miss some of it there. So this is the corrective pattern, but we're basically looking for 5 waves up through here, and they're a bit dodgy to count, but I'd figured this was just the number 1 here, number 2 within here, the 3rd here, the fourth unfolding through here as part of all of that, and perhaps 5 little waves up through here, which would be the 1, the 2, the 3, the 4 and the 5 coming in somewhere there. The 40, 42, 10, the 21 there perhaps would be it there, but it could certainly fail from here as well. We just need to allow this to play out through here. That's the important point there. And I think some of the other points in here, firstly, one of the stronger ones is the copper market. And we've been watching through this. We've been watching this, and we understood that coming from this area down here off the 390 would see a retest back up through here. And now we've seen this retest fail through here. We're starting to see this on an hourly chart here. So we've seen a strong sell-off. All the base metals are in negative territory on Friday. Same with the energy sector, with oil as well. So we're starting to see the beginnings of an impulse wave down through here as well. So we should see 5 waves down to here somewhere, a bounce back up to the 395, and then edging down further through there. So we'll keep an eye on that, and we'll be honing in on this particular structure that moves down and the one back and so forth. So this also supports the top of the Dow being in play as well. And when we look at the oil market as well, we can see that, well, it's been struggling all the way through here. We can't call that in as a top here yet because we don't have an impulse wave coming down through here. But if this market moves under the 85 there, well then breaking this trend line through here, then we'll pretty much have that, and we'll have a 5-wave structure there. As I mentioned, the levels here are 85 and 88, and 86.50 is the sub-level through here, so that will play its part as well. So we'll see bounces off that and so forth, but even locking under that would help with that downside thing. But point being is that these drivers are creating downside patterns now, and they haven't moved up with the indices. So with the indices, we're seeing shorter trading ranges up on lower volumes, and we're starting to see some of these drivers here work to the downside, but we don't have the evidence to call those tops in just yet. So it's all about moving and grooving with the patterns a little bit. The gold market coming into play here. So we've been looking at this, as you'll see on the gold charts, as a larger triangle pattern in an A and a B and a C and a D and an E. And so that's how we're viewing that there. So there's no rush into this either. We want to wait for this E wave to come in through here, so we should see some sort of 3-wave structure. So we'll see a 5, 3 and 5 coming up here. It could come up further here, it doesn't really matter, but we just need to see how this settles in through here for the wave 4 here, or will it break lower. So once again, we just need to allow this to play out here. And 18, of course, is the minor trading level through here, so that's the center pivot for all of this at that degree. Then secondly, we've got the first levels degree smaller, which is subgroup 2 here, and they're playing into support here. And the the resistance here would be group 1, the 10, 20 and 30. So if support was found on top of group 1, then we can look to go to the upside there. Now this push here, coming up here, once wave 4's in here, this push up through here as a wave 5 going up through there, then that would be the same as the Dow Jones going to the downside. Okay, so with the Dow Jones, we're looking at a wave 4 too, aren't we? And we're looking for a wave 5 to the downside. We're waiting for wave 4 to finish, and so we'll be seeing the reverse of this in the Dow Jones here. And one of the opposite views for this, to support this, is the US dollar, and we've just changed over to the deck December contracts here, but I need to pull this into line a little bit further. But we've been watching this come down through here, haven't we? And 78, 8's a profit-taking number, so it's doing its job and all the rest of it. Now the move down here, this is the first time that we've actually seen support come into the market in the US dollar. Okay, so we still may get another push down through here, but this would have soaked up a lot of the selling here, or the sellers covering their short positions at this point here. So yes, we can see another move down through here, but what we can say is that we're in on the intraday. This is a 10-minute chart on the intraday basis of all this, where we're coming into finding support now. So if this is the third wave down here, and this is some sort of fourth wave here, then the fifth wave is another little 5 waves to come down. So we have our first support coming in, and we knew that that would come in around the 76 as well, which would have been lower on the previous contract. So this is just a bit higher on this contract here. But support in the US dollar will create the top for the Dow Jones, and it will also see the gold push up, because once this correction here is finished, then then we'll see this market push up quite strongly. And also, of course, the low and the support for the US dollar, be it here or be it one more push down through here, would also create the top for the euro as well. With the euro here, we can see that there's weakness coming through here as well. In the bigger picture here, we've been using the daily robo through here and the weekly robo through there. I still think that's a really nice way to go once the euro is trending. Once it's going, we're just trying to find the top in play through here, and we could certainly sort of have it in here. It's the same with the Australian dollar as well, in terms of finding its low here. So with the Australian dollar here, this is a 2-hour chart, and the bigger picture here at $1.10 here. So we've either got this move down here as wave 1, and this is wave 2, and then we're looking for a third wave to come down. So either that, or we've got a simple A, B, and a C wave here. And not that it makes any difference in the short term, because whichever way it goes, there's going to be a bounce off the $1 here. So in this move coming down through here, what we're looking at is we're looking at down for 1, back for 2, down for 3, down to here, and we're looking for wave 4 to go back here, and then wave 5 to come down. Okay, now wave 5 will probably be about the same length as wave 1 here, but we've been looking at this sort of area in here, and if I just bring up a smaller chart here, then we can see it. So we've been yakking about this all week. So we were looking for this is a little wave 3 here, wave 4 here, wave 5 down here, and then we're looking for an ABC for wave back for wave 4. And wave 4s, as you can see here, are always, not always, but mostly complicated, and especially when they will be complicated if wave 2 here is simple. So a simple wave 2 here will create a complex wave 4, and that's this is a simple wave 2 from here. So we've got this A, B, and C here for wave 2. That means of that degree within brackets there. So that means that this wave 4 here in brackets could get really complicated. This could be just the A wave, and then a B, and then a C, and then we go down. So a bit like we're going through in the Dow Jones since the August of 9th there. So, but I'd say that we'd get something like this pattern within here. So that's what we can look at. So that leg down there would be that leg down through there, and this move up through here would be this move up through here. So it's still got this sort of tough bit in here to do. So we could still get this tough bit here before we go down through there and take these lows out. But in terms of technicals, then wave 4 here would move back to wave 4 1 lesser degree, which is this one here, and we're looking at the 103.72, and also the 38.2 retracement level 2 is in this area as well. So it does seem to have got some target. It's got its target points in here, and we were looking for 5 waves coming up through here, which are a little bit hard to track and a little bit dodgy to sort of work out a little bit. So I've just gone through this a little bit in terms of 1, 2, 3, 4, 5 for that one there, for 1, back for 2. The third wave, I don't know if that one there or part of that there, or that's the top of the third, and that's the A, the B, and the C here for the fourth. It doesn't really matter. It still comes into the same area here. And then we've got this move up through here, which is overlapping wave structures, but the 1, the 2, the 3, the 4, and the 5. So this could be an ending diagonal triangle. So we may be able to go short from here, but just don't have any sort of proof of any impulse wave coming to the downside through here. But if once New Zealand opens up on Monday and Australia starts to open up, if the market is trading under the subgroup 2 here, then you can use the subgroup 2 here. It's actually a micro group 2, but anyway, that being on the right side of the 72 there is the name of the game, and we'll see how that that pans out. But we should expect that to come down. But the Dow Jones was up a little bit, but the Euro's down a bit, so there'll be a bit of a tussle there. But just being on the right side of 72 is going to help a lot there. So. Right. Okay. So, well, that's it really. It's just a bit of a tough place all over, and we just really need to allow the Dow Jones to play out here. Look, I can find some trades for Monday to put out. If I do that as robo daily trades, then definitely lock in some profit as soon as you get to break even as quickly as possible. So if you've got 1,000 CFDs going in there, then take 30% out as soon as you get to break even on your stop, so you've got a free trade. Now that might come at 11:30, might come before that, and might come in the afternoon. But you want to play a very tight game while this situation is going on through here, because early this week we'd expect this to really struggle from this point here. So. And like I mentioned, on the long side, we've got plenty of time, so we're not going to miss anything. And some of the trades that we'll put out on Monday morning, they will have reasonable sort of Elliott patterns that if we do see a move up to the 27th of September for another 7 days, then these particular patterns that I pull out will be suitable for that ride. So still get to break even first, and then get that free trade, and then allow it to play out in the normal daily robo method from that point. Alrighty, good morning and good luck.